Are we on the brink of a major market shift in real estate this year? Will we continue to see more unexpected turns that catch everyone off guard? As real estate agents, we are now seeing trends that could challenge what we've always believed about buying and selling homes in Canada. From Alberta to Ontario, the market is not what it used to be. Later in the video, we'll talk about how almost half of existing mortgages will be due at today's rates in the not too distant future. Is this a crisis or an opportunity? Considering rent prices, house prices, mortgage rates, and more, let's talk about it. And in the meantime, if you're thinking of a move this year, drop me an email. My contact info is in the description below. House prices might go up as little as 5.5% over the year in 2024. But what does this mean for buyers and sellers? Well, it's a relatively stable market. For sellers, this could mean a favorable market to sell their property for a good value. For buyers, on the other hand, this might mean slightly higher prices, but hopefully if prices do go up a little bit, that will give them a few more options to choose from. Different places in Canada, however, obviously behave differently. For example, we've seen Alberta become a little bit of a hot spot in compared to many other areas in Canada. Now, why is that? We know that a lot of people have been priced out of BC and Ontario, and so a lot of people are looking at Calgary as a nice big city close to the mountains that still has reasonable weather considering Canada. And because of that, and its affordability on prices, historically speaking, it's been a very attractive place to consider when it comes to Canadian living. However, over the past year, because of the significant increase in prices, that affordability is not what it was simply a year ago. And one of the biggest opportunities and hotspots for commercial and residential investors right now is Saskatchewan in general, where since the pandemic, the majority of the country has seen increases in real estate prices up to 30% and 50%, sometimes more than that when compared to pre-pandemic prices. Saskatchewan has only seen somewhere between 10 and 13% increase in values when considering the annual incomes are the same, if not more. There's really only two factors that we can look at when trying to predict market trends. Number one is consumer behavior, which is the way we all behave in the marketplace. And number two is the government intervention and what they're doing in order to try to stop one situation or another from happening that would have a negative impact for everybody overall, which right now, the one thing that they're using is the rate hike and the interest rate, mortgage rate increases. One thing that we know for sure is that since rate hikes about a year and a half ago, we still know in Canada, most mortgages are either 3 or most typically 5-year mortgages, historically speaking, which means close to half of the mortgages that were issued at yesterday's rates pre-rate hikes will become due within the next year or 2 years. Because of that, I don't see the Bank of Canada putting any additional stress onto the market with rate hikes, considering we still don't know how all of those mortgage renewals will play out in the current market, because those rate hikes are going to cause additional pressures and there's going to be additional demand on buying and selling homes due to the additional stress, financially speaking, as with inflation on gas prices and grocery prices and everything else, we are going to see more downsizing, and we are starting now, of course, to see affordability being more of the focal point in terms of what is an attractive product in the marketplace today. As compared to shortly after the pandemic, we were seeing a spike in demand in the market and we were seeing people move to the suburbs and acreages. The trend now is almost the reverse, where condominiums, townhouses, and smaller single-family homes seem to be more of the attractive option for buyers and sellers right now. That being said, we still do see an increase on the horizon for land prices and rent prices and house prices, which to me means what will happen in the lower price bracket compared to the upper price bracket. And if you think it's not a good deal today, considering the fact that there still is strong demand, there still is not enough inventory, we're still continuing to see prices climb. Additionally, the consumer behavior recently has been, since rate hikes, we have seen things gradually slow down from the end of August in 2022 until January. Things were still moving, but at a much slower pace. Uncertainty was starting to increase, but for the first time in a very, very long time, we saw in January of 2023 what you might consider a gridlock market, meaning sales were down, but listings were down too. So supply was down and demand was down. So what does that mean? Well, I call that water behind the dam, which essentially means there are still people who need to buy and sell, but because they have no idea what's going to happen in the marketplace, they've simply put things on pause. We saw that happen in January into the mid of February of last year, 2023, when all of a sudden people got a little bit of a confidence in the market due to the fact that rate hikes were on pause. That created just enough confidence for the seasonal market uptick, as well as the water behind the dam and the market correction to simply overflow with activity from what seemed to be an overly active market from mid-February until 2023. At the end of August, things started to come to a halt yet again. Now, things are moving a little bit more strong than they were in the January of 2023, but definitely not what we would consider a normal fall market as compared to previous years. Now, the interesting factor we have coming with us for 2024 is the simple fact that, yes, rates are estimated to start softening into the spring market and even the summer market of this year, which I caution. We have water behind the dam, we have rates softening, and we have a seasonal market uptick all happening at the same time. Why can't we give it a little bit of a boost in the off season is my question, because we have a herky-jerky roller coaster ride ahead of us, and I predict this year's spring and summer market to be absolutely astronomically wild and crazy. I think it's going to be a very, very busy market. I think we're seeing a little bit of a glut in the new product for inventory right now here in Saskatoon, which I think we will see clear out all within 1 week when the market does have that seasonal market uptick. However, what I will also say, when you compare the seasonal markets to what they were prior to the pandemic, of course, we had a normal spring market when the snow melted, and we had a normal increase in activity right before school time and then right before snowfall. However, since the pandemic, we've seen the spring market creep upwards into February, sometimes March, and not carry through for a full season when it comes to a seasonal uptick. We see a short, quick, fast surge in the market activity right around February into early March, and things slow down and steady, consistent, strong all the way through the summer. Whereas we'd usually see a very strong uptick and then a slowdown in summer. That has not been the case. I think partially because people are not traveling as much as they used to, so they want to get the move done before the snow melts so that every nice day they can take full advantage of. And we're seeing that trend continue year over year since then. Likewise, with fall market, we would normally see things get a lot busier in fall, which has not been the trend since the pandemic. Considering the fact that rent prices in many areas have close to doubled, I know that the rental laws are very different from one province to the next, but the demand for rentals has gone up significantly, which is good in some ways for people that are considering investing in real estate. However, if you are considering purchasing your first home, it has become more attractive than ever to purchase, considering the fact that rental rates are not nearly as affordable as they used to be. However, we also know that interest rates and the cost of borrowing is largely what's causing that. And as well, with the increase in prices for real estate, it has been a challenge for first-time home buyers. Yet, the debate still continues. And especially today, should I pay off my mortgage or should I invest the difference? Should I rent and invest my money or should I buy a house? We still know that typically and historically real estate values will go up over time. Is the market going to crash? Will there be a large correction? Well, here's what I know for sure. In Toronto and Vancouver, there is more likely to be a correction than there is in the prairie provinces, of course. But if you're looking to get a good rate of return, who knows what that is anymore, but if you pay off your mortgage at 5 or 6% interest, that's a pretty decent return, especially considering it's a guaranteed return. Yes, maybe over time you could get a little bit more in the market, but there is something to be said about the fact that when you pay your mortgage with dollars that are out of pocket in a market where expenses are volatile, getting rid of the fact that you have a mortgage payment at all is obviously favorable. But I'm curious your thoughts. Pay off the mortgage or invest the difference? Hope you found some value. Don't forget to like, comment, subscribe if you're thinking about making a move. My email is in the description below, and I will see you in this video next. Have a fantastic day.